Okie dokie. We back. All right, ladies and gentlemen. So I don't see anything in the chat. So I presume there are no questions thus far. We are all good to go, which is fine by me. Right, cool. So we dealt with question 4.1. All right, so let's deal with the next one. Okay, so this one I just kept the answers in there. Okay, 4.1.2. Okay, and they asked us just to do the current account for the partner. So again, all you're doing here is you're literally looking and saying, okay, for this specific partner, what was the opening balance, all right, which we get out of the table, okay, which we get out of the table. Let me just zoom out just a little bit, just so. That's not what we wanted to do. Oh, come on. Okay, there we go. Okay, we are back. Cool. Did I hit the record button? Yes, I think I did. Okay, so there we are. That's what we want to look at. Yes. So I just want us to look at our question paper there. So opening balance for this partner, their current account, 80,000. It was a credit balance. We'll put that on the credit side. Okay, and then literally all these adjustments that we did, we are pretty much now just doing that in their respective accounts. So there we had interest on capital. That was the first transaction. We calculated it. Then they had a credit balance, so we were happy about that. Then we had interest on current account. Remember, we calculated 10% of 80,000. Boom. There we go. Salary. Again, can you see all the perks, right? All the rewarding happens on the credit side because it is like capital, increases on the credit side, decreases on the debit side. Okay, salary, 255. Appropriation, so this is that profit that we had calculated, the 855,000 to 10, happiness there. Then we penalized him because, hey, he took money out of the business. Okay, so interest on drawings, we penalized him. Okay, and drawings, remember, drawings gets closed off to the current account, not to the capital account. That's why you have drawings over here. Okay, then obviously we calculated what was the balance on the account. Okay, and then he has another credit balance, so that's good. Okay, so that is 4.1.2. all right, then we move on now to the statement of changes in equity. Okay, right, again, I've just left the answers in there because you should be comfortable with this. All right, well, that, and we don't have time to actually do it together. Again, remember what I said, the capital accounts are literally only for capital contributions. So here you can see 400,000 at the beginning, all right, and it ends off with 400,000. Can you see nothing here has been affected by your profits, okay? Your salaries, all of that stuff is happening in the current accounts of the respective partners, okay? So there you can see, remember, in the appropriation account, salaries to partners is getting paid out of the appropriation account, okay? And there you go. You can see the portions. Bonus, we only had one partner who enjoyed a bonus. Interest on capital, you can see there. And there, can you see the interest on current account? Remember, we had 8,000 that we needed to pay out and 5,000 that was coming to us, which was a negative on partner H's account. All right, so that's why we have a negative 3,000 over there. Okay, so can you see it's pretty much doing the same thing in the appropriation account, but now it just is in a different format when it comes to the statement of changes in equity. Then interest on drawings, same calculation, just displaying the information differently. Partner share of total comprehensive income. There you go. Okay, again, if we had retained earnings, this would be different. Okay, then you have drawings over there, and then finally you have your new current account balances. Now, all of this, if they had asked you to do the balance sheet, all of this would be there under your equity section, your capital and the balances on the current accounts as well. Okay, right. So that, ladies and gentlemen, is your question 4. Okay, where are we? That is your question 4. Okay, dealt with question 4. Now question 5, all right, the last question that we have to go through before we get into the theory side of the paper. Okay, let's see what they're asking in question 5. Question 5. Question 5. All right, so first thing they're saying, complete the general journal entries for adjustments 4 and 5. Okay, above, on furniture sold and depreciation respectively. Okay, cool, no problem. Show all workings, no narrations needed for each entry. Guys, again, if they do ask for narrations, shouldn't give you a problem. It's literally a phrase of what is actually going on in the transaction that you are recording. Okay, depreciation on vehicles, depreciation on furniture, for instance, in this case, all right, or sale of asset, yeah, that type of jazz. And then question 5.2, prepare the statement of profit and loss and other comprehensive income for the year ended 30 June 2018. Okay, round to the nearest rand, show all workings. People are always asking me, because I'm doing these numeracy related modules, sir, are they going to ask us to round off to 2 decimal place or to the nearest rand or whatever else in the exam? Guys, it will tell you, they will tell you in the exam what to do, or in the test what to do, either within the question or on the very first page of the question where you have your instructions. Okay, all right, if they tell you on both, make sure that you follow the in the question one if it's different from the one on top of the instructions, because for this specific question they will be pretty much asking you to round off to the nearest rand. Okay, cool, right. Then finally, by using the statement of profit and loss and other comprehensive income for the year ended 30 June 2018, completed in 5.2, comment on the findings and make recommendations to the board of directors on how to improve profitability. Hint, what can the company change, increase or decrease to increase their profits? Guys, this, we just need to see logic. That's a free 5 marks, but we need to see logic. Our cost of sales is high, so maybe they should look into new suppliers who would charge them less. We just need to see logic. All right, what will increase your profits? Here they're even hinting. What do we need to decrease, or what do we need to increase? Revenue. You can think of revenue. They need to make more sales, okay, whilst maintaining their costs. All right, maybe they need to decrease marketing. Okay, maybe they need to run specials to increase the revenue. Run specials to increase the volume of products sold. etc. We just need to see logic. So I didn't even bother writing this down or suggested answers, because I think anybody who understands, what obviously that more revenue and less cost equals more profit should be able to answer that question. Okay, so anyway, let's get into there you can see 20 marks, 15 marks, 30 marks. Guys, please make sure you know your statements. They can ask you for any statement. They could ask you for balance sheet. They could ask you for I've forgotten that one. Ish, man. Your current assets and your current liabilities. What is the other word for them that they like to use? Make sure you know those. They do also ask those. Okay. Anyway, let's get into it. I had something there in the chat. That long one. Yeah, there's that one, the long one, which has, that's like 2 hours alone. So, well, that speaks to how well you must know it. You must know it. We won't ask you the whole thing. We'll just ask sections of it. Right? So here we are. We did this. Okay, so here we are. Okay, so why? I've done this already for you guys, but now I want to take us through the steps. Very important. Guys, I saw in your test, you guys were not doing timelines, eh? I don't know why you weren't doing timelines. Okay? Very, very important that you do timelines, people. Please, please, please. It'll help you. Okay? So first thing they wanted us to do is 4 and 5. Now let's see. Just in case maybe you don't have a question paper on you. Let's see what bullet points 4 and 5 are. It says provide depreciation as follows. Provide for depreciation as follows. Okay, so that's 5. 4 is a piece of furniture was sold for cash on 1 July 2017. No entries have been recorded. Okay, sold 1 July. Okay. It was originally bought for 18,000 on 1 July 2015 and was sold for 12,000. Okay, cool. Right. So here I want to do a timeline. Okay, but first let me just read this other information. Let's just go through 5 as well. Provide for depreciation as follows. Motor vehicles 20% per annum on straight line method. Note, no new vehicle was bought. Sorry, a new vehicle was bought for 180,000 on 28 February 2018. This purchase has been properly recorded. So they've recorded the purchase, but we need to account for depreciation on the new vehicle. B, furniture and fittings 10% per annum on reducing balance method. So this information is necessary for 4, because this is furniture, a piece of furniture that was sold. Okay, cool. Anyway, let's get into it. Is there somebody who said something in the chat? No comment, no comment. Muzamil is trying to get me in trouble here, guys. Talk to your friend. Remind him these sessions are recorded. No, VC loves you guys, honestly. Yeah. I think talk to your tax and other friends and ask them how hard they have it, right? So you guys should not be complaining. So what I wanted to do quickly with the timelines is literally just to show you how much just to quickly draw them for us. So we bought this thing. When did we buy this thing? 1 July 17. 15. Sorry. 1 July 15. Okay. And we sold this thing. Just going to do this. 1 July 17, which is the beginning of our financial year. Because remember, we're doing this for the year ended 30 June. Okay, right. So there was also a year end here. This is now. Wait. Yeah, 60. So we've had this for 2 years. 1, 2 straight financial years. And this is the financial year that we are actually interested in. Since this happened on the first day, we obviously need to record the disposal of this asset. Because can you see, the depreciation here would have been recorded in the financial statement 30 June 2017. Okay, so here we're interested in the disposal of this asset. Okay. So can you see again, if you read that first piece of information, a piece of furniture was sold for cash on 1 July and no entry has been recorded. Okay, right, cool. So again, guys, when dealing with a disposal, what do we need to do? We need to remember our process, okay? And our process, the first thing you want to do is we need to take out the value of the asset from our books. That's the first step. Step 2, we need to remove accumulated depreciation from the books. Then we need to record the sale. After we record the sale, then we need to record whether we made a profit or a loss on the sale of that asset. But anyway, because I know we may have forgotten those steps, I just quickly popped up the slides in the break. So here, step 1 again, I'm repeating, take out the initial cost price out of the books. Okay. Step 2, take accumulated depreciation out of the books. Step 3, record the sale. Okay. Did we buy it for cash? Did we sell it for cash? Did we sell it on credit, or did we do a trade-in? And then finally, did we make a profit or loss? Okay. That's asset disposal for you. Okay. Remember, I told you guys, take a picture of that slide. Okay. So here, remember, when it comes to furniture, we're on the reducing balance method. Okay. But this actually, let me go back to this right here. I want to be on my cursor. So this calculation actually is actually for here, for depreciation. It's not for this here. So we know that, okay, we're removing the value of the furniture and fittings. If you just put furniture, you'd also get it correct. Okay, but furniture and fittings is probably the best accounting term, all right, for the account. So anyway, we're removing it, so that means we're crediting the furniture account. So we credited 18,000, and we know the other account that's involved is asset disposal. We're debiting that. Happiness there? Cool. Move on to the next step, accumulated depreciation. All right. Remember, we're removing all the depreciation that has taken place on this asset. Okay. So remember, we've had 2 years of depreciation on this asset. So the first year, we know we bought this asset for 18,000, and we know that depreciation is at 10%, 0.10. Okay. Obviously, we hadn't accumulated any depreciation for the first year. There was no depreciation that took place prior. So then we're saying, okay, 10% straight, that's going to give us 1,800. Okay, but now when we move to year 2, all right, we know that we actually do have accumulated depreciation from the first year. So we have to say 18,000 minus 1,800. Okay, and then we say times your 10%, which is what's going on over there. I'm just doing this so you guys can clearly see. This is for year 1. This is for year 2. Okay. All right. And then times 0.10 depreciation. Okay. And let's see what is that. So 18,000 minus, or I can just say times 0.90. Yes. I messed it up. 18,000 times 0.9. Okay, yes. So that's going to be, here you get 16,200, then times 10%. That's going to give you 1,620. Okay, you add that up, and that's how we're now getting the 3,000. So I'm just going to write this out quickly. And that's how you're getting the 3,420. Okay, right. So that's the accumulated depreciation that we need to remove off of our books. Okay, we've removed it. All right, we've dealt with step 2. Then we move to step 3, recording the actual sale of this asset. Okay, go back to the question: how did we sell this asset? Did they tell us? Sold for cash. Okay, so we know whenever cash is involved, that means bank is affected. So bank is going to increase, so that's why we're debiting 12,000. And we know the other account that's affected is asset disposal, temporary account for disposing assets that we've sold or gotten rid of. 12,000 over there. Okay, happiness over there. Then finally, last step, did we make a profit or a loss on this furniture? Okay, How do we calculate this? Does anybody remember? How do we calculate this? How do we calculate whether we made a profit or a loss? Help teacher to help the class. What must happen here? Tell me, guys, tell me. What do we need to do? Okay, just in the interest of time, let's do this. So, we say cost, okay? We need to get the carrying value. Okay, so we say cost. What was the cost to us? Okay, let me write the formula first. Cost minus your depreciation or accumulated depreciation is going to give you your carrying value. Okay, this is stuff you guys should just know. Why do we need the carrying value? So that we get the selling price and we minus the carrying value. Selling price, how much did we sell it for? So that we can then find out, okay, whether we made a profit or a loss. Okay. Now, let's do that practically. So 18,000 minus, what was the accumulated depreciation that we've had? 3,420, which then should give you what? Let's see. Minus 3,420, I get 14,580. Okay, but guess what? Guys, we sold it for 12,000. So the selling price 12,000 minus the carrying value of 14,000, 580. Okay, what does that give you? Okay, that gives you 2,480 rand loss. Can you see? This is actually in brackets. Can you see that? Because mathematically, 12,000 obviously minus 14,000 gives you a negative. Okay, right. So you know you've made a loss. So here, can you see? Loss on disposal. All right. There we've debited. Remember, a loss is like an expense. All right. In fact, it is an expense. It takes money out of the business. So we debit that. Okay. Then, asset disposal, we're obviously going to do the opposite. We're going to credit that. Okay. And there you go. I hope that was useful and you guys were able to follow. So that's what we needed to do for 4. Then we move over to 5. Let me check if there are any questions. Total revenue minus, isn't it? Sorry, Muzamil, what are you saying? Were you saying this in relation to when I was talking about the income and expense account? Oh, the formula for whether we made a profit or a loss. Yeah, so that is correct in terms of general profit and loss. Okay, if we made a profit or loss. But here we're speaking specifically to did we make a profit or a loss on the sale of this specific asset. Yeah, I hope that drives it home. Okay, just ask me if you got any further questions in that regard, and then I'll obviously clear it up. Right, but in the meantime, let's proceed. Okay, so we've dealt with that. Okay, now in question 5, we have a different scenario. We have, let me do it in blue. We have a vehicle that we bought when 28th February. Okay, 28th February. What day is this? 28th February. Ooh, is my mind switching off? There we go. 18. Okay, and our year end is 30 June. 18. Okay, so if you do the timeline here, you'll see this is 4 months. So 4 over 12. Okay, I hope I'm correct. You guys can double check that. I'm putting 18 here. Sorry, that should be 12. Please make sure you have a 12 there. And we bought this for 180. I'm just going to put 180K, but you guys obviously know that that's 180,000. Okay. And yeah, that's on the straight line method this time. Okay, so moment you see straight line, you know, oh, at least they're making my life easier. But another thing we need to remember is we had, if we look at the balance there, let me show you on, for vehicles, where are vehicles? There, motor vehicles, 530,000. So this tells you we had old vehicles before, all right? We had old vehicles before, because if the new vehicle we bought is only valued at 180,000 and they said that they had recorded the purchase, that means that here on 30 June 2018, this 530,000 includes that vehicle, since they said they recorded the purchase. But what they want from us to do in 5 is to record depreciation. Okay, so then that means we need to also calculate the value of the other vehicles, or the old vehicles, okay, which would typically we would have had from 1 July 17 to 30 June 18. Okay, right. So how do we go about that? Okay, so for here we can quickly just calculate the depreciation. I'm going to explain it from here because I think I don't want us to run out of time. Okay, so for the depreciation on the old vehicles, okay, actually, let me just quickly see something here. Okay, yeah, so I see what they've done. So the depreciation on the old vehicles isn't, if we look here, the total is 530 on all vehicles on 30 June. Let me actually, sorry, let me not do that there. Let's go home for a second. I want to remove that. Okay, and let's go back. Okay, so I want you guys to see this. So 530 on, and I'm putting that next to the date. Okay, this is obviously the cost value of all our vehicles. Okay, so then we can take the cost value of the new vehicles and say 180 minus that, okay, to get the cost value of all the old vehicles or the other vehicles that we've had from 1 July 2017. Okay, all right, so the difference there is now the value. So when you want to calculate depreciation, you simply say the 530 minus the 180 times the 20%. Remember, we're doing straight lines, so fortunately we don't need to try and get the accumulated depreciation on vehicles. That's how we get the old one. Then to get the new one, we're saying this 180K times the 4 over 12 months times 20%. Okay, and then when you add that up, you should get this 82,000. Okay, then we had depreciation on vehicles, depreciation on furniture and fittings. Okay, so there, all you need to do is, again, you need to look at what do you call it, the value of your furniture, and remember, I want to show you guys something so that there's clarity, and maybe you might need to watch the video again just to hear me say this again. But if you look at your the table that they gave us, this is what a list of accounts for the year ended 30 June 2018. So can you see we sold that furniture on 1 July 2000 and when did we sell it? Sorry, let's go down. Oh, 2017. Okay, no, then that's fine. then that is perfectly fine. So yeah, this amount is excluding the new furniture. Sorry, the furniture that was sold. However, if you look here, the accumulated depreciation, can you see it's for 1 July? So here you would need to obviously remove that accumulated depreciation. So let's go back. Let's go back. So you have the 280. Okay, why are they? See here, they are removing it, but they shouldn't be. They did the right thing here in removing this. Okay, because they did not say where the furniture doom. But again, this is for 30. Oh, it was not recorded. Remember they said in this section here, they said no entry has been recorded. So they had not recorded that the fact that this had been sold, okay, which is what we did, okay. So this furniture is actually reflective of the fact that it's reflective of not only the furniture we've kept, but the furniture which we actually sold, okay. Right, awesome stuff. So yes, they're right in subtracting your 280,000 minus the 18,000, okay, to take out that furniture, and we want to calculate the depreciation on the stuff that we still do have with the, and then obviously here, same principle. Remember, we're on the reducing balance method when it comes to the furniture. So here we're saying, what is the accumulated depreciation? Just want to show you where we're getting these figures. Accumulated depreciation on furniture, here it is, 87,650. That's fine. We plug it in, minus the accumulated depreciation we had calculated on the furniture we sold and had removed from our books, minus that out, then we say 10%. And that should then give you this 17,777. Okay, right. So that's how you do that calculations for the journals there. Okay, then step 2. Guys, are there any questions so far? Okay, I see we only have like 18 minutes left. It's fine. We'll find, okay, awesome stuff. Glad you good, Muzamil. Okay, right. So that was the depreciation thing. I wanted us to just take some time on that because that I think is the hardest bit of question 5. Okay, depreciation. We spent quite a bit of time there, but I think for what I saw in the test, you guys are doing a lot better, than in previous years. So I'm really happy about that. So here, literally, you're doing your statement of profit and loss. All right, your income statement. So guys, here literally, you're literally just reading each adjustment and adjusting accordingly. Okay. So I don't think we have time to run through all of them, but remember, cost of sales here is being affected by, in there, they've got trading inventory that needs to be readjusted. They like to say you did a stock take and then you realize your trading inventory was actually less than what it actually was, okay? Then they also ask you to adjust your allowance for credit losses, okay? It used to be 900, but they want you to adjust it down to 800. So that's why you can see this is listed under other income. Since allowance for credit losses used to be 900, all right, and we're reducing it now to 800, that means that that's like an income to us of 100 Rand, okay? So I'm trying to see what else. Stationary, that shouldn't give you too much problems, okay? They just said we did a stock take and what you actually had was 1,200 on hand. So we're deducting that to say, okay, we then obviously need to do, our stationery actually was valued at 910. Initially, we said it was 2,110, but we actually have 1,200 on stock. Then electricity, what did they say in the question in relation to that? I don't recall. So they say electricity of 2,200 for June 2018 has yet to be paid or recorded. Okay, so there it was accrued expenses. So we were actually owing. So that's why they're adding it to the electricity over there. And I think those were your adjustments. Okay. Then there's also an interest on interest bit there. Where is this coming from? Trying to see what piece of information was speaking to this. Interest. Okay, so here they're just adding up your interest on mortgage loan and interest on creditors' accounts. So they're just adding that together. There's nothing in the additional information in relation to that, so that's fine. So guys, you shouldn't have a problem with doing your profit and loss. That's actually the easiest one because you know it's just your sales revenue, cost of sales, calculate your gross profit, add other income, then you have your gross income, then obviously less your expenses, okay? And there you then calculate your profit. Okay, here they made a loss. Okay, right. So that's your question 5, okay? So we've done 5, 4, and 3, okay? And then you literally have your theory questions. Guys, how many marks did we discuss? How many marks question 5 was for? Okay, I'll just tell you now. It was for 40 marks, all right? 40 marks. So make sure you're comfortable with your adjustments, your depreciation, you're comfortable with your partnerships, you're comfortable with your CCs. Those things are definitely going to be coming. Okay, right. Then here you had multiple choice. You had multiple choice. So literally it says, let's see how many minutes we have. Okay, so I think we can get through the theory. The following transactions might increase the outstanding balance of a debtor. Okay, so yeah, actually, you know what I'm gonna do? So yeah, let me just do this. My suggested answers, I'll just give you guys my suggested answers for the theory of it, and then we'll go through the theory on question, what's this? Question, here, it was, what did I end up saying? I think the answer is there. I think it was 1. It was 2. I selected 2. That's what I thought this was. Okay, right. So yeah, I think I'll just scroll down very slowly since it's on record, and then when you guys obviously go to the YouTube, you can quickly see there. But literally, guys, this is the theory of accounting, and you'll find that some of the questions here are from 1A. So I hope you did your job with 1A, and then you should be fine. So there are my suggested answers to the theory here. It's a whole 30 marks, which is quite a lot for a paper that's 180 marks. Okay, don't spend too much time here, guys. Remember, you have structured stuff to get through. Okay. Yeah, so try and get through it as quickly as possible. Okay. But I love these theory questions in the sense that they obviously push you to think, and they're a great reflection on, you know, discussion-wise. Did we really get the gist of it? No, it's just you can't do 1B if you don't know what we were doing in 1A. So, you know, the fundamental stuff, you know. So don't worry. Muzamil, I think you just enjoy complaining. Honestly, this guy. So anyway, let's quickly get into question 2. I'm gonna show you as long as it doesn't require a response from me, you can freely say whatever you want to say, my friend. No worries. Okay. So let me show you the workbook because I think this would be good just so you get a feel for how they can ask. Because question 2 is also just another theory question. just to show you. Oh, so literally, yeah. So there's your multiple choice, and then there's your question 2, which is fine. So what I really need to be showing you is actually the actual question, the way they structured it, because they were basically saying, please fill in the missing pieces. So, aha, this is unit 7. Okay, this is unit 7. So can you see formal bookkeeping system, which is the same as your IFRS related answers, and then here would be your what do you call it? Management accounting related answers. Okay, but again, make sure you study the indigenous, all right, and the formal bookkeeping system from your unit 7. All right, just to have better structured answers. I'm giving you your last potential option if you forget the stuff from unit 7, at least from a theory perspective. Okay, right. So that's 10 marks there that you got. Okay. But here, guys, this is not rocket science. You should be able to answer this without even having studied. Okay, here they say complete the table below by writing down only the question number and next to it the correct answer in your answer book. Let me read that again. I don't get it. Write down only the question number and next to it the correct answer in your question book. Oh. So let's see. Oh, okay. All right. Anyway, I did research it. So for this one, oh, so you're pretty much looking for the missing bits and just filling in the information there. So for 2.1, indigenous is tailored to the needs of the owner. Okay. I think the best way to revise this is just to say, okay, indigenous, these are the things that you typically find. Tailored to the needs of the owner, mostly cash transactions, therefore no source documents. Okay. Transactions done using hard cash, no bank account is involved. Okay. Often only one person involved, no control measures except for self-management. Okay. Plans business on a day-to-day basis. Okay. So those are your indigenous. Now formal, how is formal bookkeeping system pretty much structured? Governed by international financial reporting standards, IFRS, okay? Supported by source documents, okay? All financial transactions done through a current bank account, all right? Then extensive control measures in place to manage resources effectively, does planning and draws up budgets at least once annually. Okay, all right, so yeah, you probably would not have gone away with doing the management accounting and stuff. So yeah, guys, do revise this. I can see the way they asked it here. You probably would have slipped up if you had gone with the route I had initially suggested. But again, are there any questions or thoughts? I see we have 6 minutes here left. I'm just going to reserve that for that. Are there any questions or thoughts? I see your comment there, Muzamil. I winged 1A and now I'm feeling it a little. Okay. Yeah, these things catch up with you, my friend. Remember I said accounting is one of those? We will know whether you studied or not by means of the things that you obviously put down, because you can't cram the different ways in which we can ask it. But I'm happy you know that now. So obviously you know there's time, and I know you're more than capable of doing what needs to be done. So that's it, guys. If you don't have any questions for me, I will see you tomorrow, same time, same place. We'll be doing 2020. Okay, we'll be doing 2020. Right. Cool. Thank you, Mozamil. You too. Have a good one. Catch you tomorrow.